And now for more on the Bank of Korea's latest decision, we're joined today by Professor Shin Se Don, professor at the Division of Business Economics at Sookmyung Women's University. Professor Shin, thanks for coming on today.
Good morning.
So the Bank of Korea has raised its interest rate. What do you think was behind that decision, and what impact could this have on households, businesses, and the broader economy?
Well, first of all, I think inflation has been very stubborn in the sense that consumer price index has been rising 5 months in a row. And also, what concerns to the most economists is the producer's price index, which is a leading indicator for consumer price. And that has been rising more than a year from 0.3% to 8.5% last month. So there's a conspicuous, inflation threat on the economy. Another thing I think is the housing price has been rising from, 0.3% last year to 2.6%. So that's a 9-month consecutive rise, even, in spite of the government's strong, decision to control the housing prices. And also, the exchange rate has been, 1370 a year before, and now it is almost over 1500. So inflation in housing prices and exchange rate has been the three most important reasons that the Bank of Korea has to raise, the key rate 25 basis point.
Right, and many analysts now expect the bank to raise rates once more before the end of this year, possibly in October or as early as August, and that's going to bring the benchmark interest rate to 3%. Do you think that's a likely scenario?
Well, I think that depends upon the U.S. rate hike. United States inflation is also very severe. It doesn't come down, even though, it came down a little bit, this month, but still, U.S. inflation rate is over 3.5%. So United States is going to raise the rate sooner or later. I don't know if it could be July or September, but sooner or later they will raise it. And if the United States raise it, I think we have to raise it once more. So the decision by the Bank of Korea whether to raise the rate, that totally depends upon the United States down the road in 2026.
Right. I'm glad you mentioned that because U.S. consumer inflation slowed more than expected in June, and this boosted expectations that the Federal Reserve will skip a July rate hike. What impact does that have?
I think, United States forecast is really funny in the sense that they have expected very high, the CPI for this month of June, they expected 3.8%, and it came down to 3.5%. So they relieved, market is very relieved that inflation has come down. No, that's not true. Still, inflation is 3.5%, way above the target rate of 2%. So I think United States is going to raise the rate. I don't know, that might be in July, but I think definitely, within 3 months, I think they have to raise it. So if the United States raise it, even though today the Bank of Korea raised it once, 25 basis points, I think within 3 months, I think the Bank of Korea has to raise once more if the United States raise it in 3-month period.
I see. And the International Monetary Fund, the IMF, recently raised its forecast for South Korea's economic growth this year to 2.6%, and that's the highest among major advanced economies, including the United States. So what's driving that optimism, and what challenges do you think could make it difficult to sustain that momentum?
Well, I will say that everything, in Korean economy right now, it depends upon the semiconductor production. It has been, the export of semiconductor has been increased more than almost 200% vis-a-vis last year. So tremendous, surge in semiconductor is a driving force for Korean economic growth. Everybody expected that would be about 2%, 2.0%, but now everybody is talking about 3.0% year 2026. Everything, I think, depends upon how the market for semiconductor will be on the second half of 2026 and possibly 2027. So there's a strong chance that the market boom in the semiconductor will continue down the road 2026 and possibly 2027. But there are so many kind of risk factor in the sense that in the market in New York, they are worried about there are too much investment, capital expenditure, investment in data centers, and AI investment. So if it is true that the market has been pouring too much money in semiconductor and AI, I think a slowdown will be expected in the second half. And in that case, I think Korean, semiconductor industry will be coming down. In that case, I think next year's economic growth will come down a little bit from possibly 3% to 2.5%. So everything depends upon future prospects of semiconductor related investment in the market.
Right. We'll have to see how that goes. All right, Professor Shin, thank you so much for coming on today. We appreciate it.
My pleasure.